Okay, hello and good morning, everyone. Today is Wednesday, February 25th. Mike Boutros here, currency strategist with you for this live intraday strategy session. Petro, thanks for the update. Stefan says audio and video okay. Good morning. Teach me, sensei. Cheers, Stephen. Stefan, rather. Good to see you. Eileen, Petro, Emil, Jay. It's a full house today. So good to be with you guys. So first things first, we'll go over the setups that are featured on the intraday page. Sterling Key has been really what I've been most active in over the course of the week. We've been focused on the sterling crosses, as it were, specifically with where the pound is, generally speaking. I do think we've been getting some really good plays. Sterling dollar has kind of fizzled out here, but still in focus. So let's go through this one by one, and we'll take a look at the U.S. dollar before we start, just to put things off here. So we've been looking at this chart, guys, for the last, God knows how long. It's been a couple of weeks. And I tweeted this out last night. Look, at the end of the day, the thing that we're focused on are two primary features. First, the fact that we're now dipping below that median line parallel for the first time essentially since October, which is when the low was made for that reference point. So that looks like it's finally starting to give out. The other focus, and more importantly, is the monthly opening range low. Okay, and that comes in right here. Let me get my gauge right here at 11,736. Okay, today's low so far, 11,740. All right, so if we do get a push below this region, it would constitute objectively an opening range break for the month. Initial targets to the downside would basically be the basic trendline support that you're looking at here that dates back to the lows we made in August. So as it stands for the dollar, we're on the cusp of being able to look at this more of a correctionary play to the downside. That said, right now you are at support. Okay, we do need to get below this region. We've been sitting in this region just below 11,880 since the 23rd of last month. Okay, today's the 25th. It's been over a month that we've continued to hold this super tight range. So if we do get the downside thrust, the expectation here is we'll see a little bit more of a decline. Initial targets would be just a basic trendline support off that August low. Just to put things in perspective, guys, when we look to play these corrections, when we look to play downside plays within the broader uptrend, you basically look typically at 236 as like your initial target. But the stretch has been so huge since that July lows that a 236 doesn't come in until all the way down here, 11,523. So we're going to curb our appetite for now. Downside break of the monthly opening range, you're looking just for a tag of that trendline support. Ahead of that, you do have the 50-day moving average, which could offer some support as well. But you're basically looking at 11,700 and then that trendline support. All right, so that's where we're moving forward, or where we are as far as the dollar positioning in and of itself on the index. It puts some color to some of the crosses that we've been looking at, right? Yesterday on Daily FX, you might have seen me put out a piece on the euro dollar. Don't necessarily think that Scalp per se is ready or primed for operation yet, but certainly the levels are super clean, and where the euro is right now, I think you have a play here moving forward once we finally clear that range. So we'll take a look at the euro in a moment, but any questions on the dollar index? This is really a very nice graphical representation of just base dollar movements, right? Dow Jones FXCM dollar index carries the euro, Aussie, sterling, and yen. So with that in mind, and looking at the dollar sitting at the monthly lows, basically support, here's what the British pound looks like from yesterday's setup. So, as we came into the close of trade yesterday, right around 9 o'clock last night, the 236 was the resistance target, 154.78, that has continued to cap the advance. Here it is right now. The top side break, guys, came right into the upper median line parallel and held. All right? If you remember when we started off the week, guys, right here, we were looking to sell rallies in the sterling. And in fact, we got a couple nice plays to the downside. Here's what the scalp looks like. Right? And on the Sunday open, that push into this major median line range, I like to call it. So if you take the basic formation off the advance from that low that you made there in January, okay, you can see that median line right there. If you mirror that slope and connect it to that low that you made on the 13th, or the 13th there, you can see that this range has caught a lot of congestion regions. Reversal, congestion, breakthrough. Just tag, rebound. Probed right into it, rebound. On the break last night, this was the target if we had made it below 154.05. So for those of you who were in the webinar yesterday, ahead of Yellen, we were holding shorts in the sterling, right? We were holding a short from the crack into the highs here on the move below 60, and the target, initial target, was 154.05. Remember 154.08, I told you yesterday, is where I had my limits. On Yellen's speech, okay, it came right into that level, took out half the trade, and then rebounded and stopped us out at break even on the rest. And this is why, guys, we want to be very prudent. And every time we achieve that 29 pip ATR, you want to be doing something. I could have easily sat into this trade and say, oh, that's a great break. I'm just going to wait and try to see if we can get into the key support down here. Well, it didn't materialize, right? So as we came into 154.08, the limit triggered on half the trade. We brought our stops to break even. On the rebound here, it got us stopped out at half that trade. So we want to make sure, especially when we're trying to trade counter trend, right? Sorry, guys, just waiting for this chart to load here. But if you look at this trend, obviously, this has been in an uptrend since the lows in January, okay? So when you're going counter trend like that, you want to be very prudent, and as soon as you achieve that initial ATR, you want to cover the trade, take a portion off, bring your stops down, and make sure you're always thinking on the defensive path here. So that's how that played out last night or yesterday in U.S. trade. As far as Yellen's concerned, listen, there's nothing necessarily new. You heard a much more cautious view. Interestingly enough, there was a lot of very interesting questions asked by the Senate panel. It almost seems like there's, special I'm not going to get into speculation, but it was interesting that so many of them came out and said, don't raise rates, make sure that the economy is on the right footing. We have to be careful not to start tightening too early. And that kind of sentiment was very interesting to me. But nonetheless, you got them pushing out interest rate expectations a little bit. Right, that expectation for some sort of June move from the Fed all but gone, and it gave a little bit of a relief here to the rally in the dollar and offered a little bit of a pullback. The event was simply a catalyst. You might have seen me and Jamie go back with a couple of tweets back and forth, laughing it up. He doesn't even like to watch those events. I just like to keep them in mind and see what's going on. But at the end of the day, guys, it doesn't change anything. All that event offers is a catalyst for price action. You're never going to be able to front run and ascertain the directional bias from something like a Senate panel meeting. Okay, if it's a data print, you have a better or stronger than expected, you play the deviation. But when we're talking about things like central bank rate decisions, or if we're talking about things that are a little bit more the devil's in the details, it's just a catalyst. So that's all to say is some people were asking if it was worth holding that trade into Yellen. I mean, at the end of the day, the trade is there. The setup is there. Your levels are clear. Let the market play out. So yeah, it's kind of annoying that we got stopped out on half of it at break even, but at the end of the day, we didn't take a loss, and we were able to lock in that initial drop here at 54.05. So I don't want to beat this trade up to death, but just a quick overview of how that panned out yesterday. I know I was telling you guys I was holding that short as we came into the webinar. Unfortunately, swing trade called out kind of the opposite of the scalp play to short. Yeah, so Stefan, you got to keep in mind what strategy we're working with, right? So sometimes, guys, it doesn't happen very often, but the scalps will be on the opposite side of the swing trades. That's only because we're looking to play the stretch into the entry sometimes. As he's looking to get short, we're looking to play the long into that level, and vice versa. So make sure you're staying objective when you're taking these positions and what strategy you're actually implementing. Stefan says, I need 2 accounts. Actually, Stefan, I laugh about it, but that's not actually too bad of an idea. That's how I trade too. So I have one, yeah, exactly, one scalp, one swing. I keep one account for real near-term trading, and I keep another trade account because sometimes you want to take longer stances against your scalp bias. Or sometimes you want to start scalping in the trade that you already have a longer-term position. So let's say I'm holding a long here looking for a larger stretch, but I want to play this downside. Well, in that separate scalp account, I can play that downside while still maintaining the longer, broader trade. Does that make sense? Oh, Stefan says, yep, makes sense. Right on. I often wonder why not immediately reverse the trade if the target is reached with a tight stop. Mark, great question, and I get it a lot. That's just not how we trade, man. Listen, Mark, just because a trade is coming into resistance, I don't know that it's going to come off. I know that's my target. I don't necessarily know that it's going to rebound and charge something that's worth a pullback, right? So, for example, let me show you an example right here, Mark, on the example that we're looking at. You know, we did take a trade here with a break below the European opening range low, or I guess this was the, where was it? Yep, here's the European opening range low that we broke, right? And we got out here. Let's say you had gotten this trigger and you took the long, okay? The long target, obviously, key resistance 57.43 right here, or 54.73. I'm a little dyslexic. Right here at this high. Am I going to take a short here, Mark? On what basis? On what basis? Wouldn't have worked out too well, right? It wouldn't have worked out too well. And then it jacked through the highs. So just because you're closing a long trade at target doesn't necessarily mean the market's going to give you the pullback. Now, Mark, if up here you had a momentum trigger that gave out, so let's say that you took the long, you closed at 45.70 here, then all of a sudden this support trigger gave out, sure, then I'll play the other side of the trade. And I'll do that 10 times a day. But just because we're closing out the long position doesn't necessarily mean you want to take the short, okay? This is an example where, just as you said, Mark, I would have reversed the trade, right? Obviously, this is early here in the U.S. trade, right at the start of Europe. You saw that rally right into the upper median line parallel, which was the objective, okay? And then you got a trigger break. Whether you use the break below 70, which is oftentimes a really nice trigger with a tight stop, or whether you use the break below the trigger, which would have gotten you in a little bit later, either way, that's a trade that you take the opposite side because you have some sort of trigger, right? Guys, you know, this is why on scalps I don't just put out, hey, a long at 47.50 stop limit, right? It doesn't work that way because when we're scalping, when we're intraday trading, we need to react, right? We need to have something to tell us to take that trade because we're trading the intraday momentum. So I can't just give you a level of stop and a limit. No, I need to see, yeah, this is resistance. I don't know if it's an entry. Momentum will tell me that. If we had an opening range break to the downside, that'll tell me that. Mark, does that make sense? I want to make sure we're on the same page here. It's a great question. A lot of people ask it. He says, well, okay, but, never mind. I'm assuming we're on the same page then, buddy. But that's just the way I look at it. You know, a lot of times you can do just that. You know, take a long into resistance, then reverse it. But again, there needs to be something to put us into that trade. So good question. So here's what we looked like last night for the pound. And even with what we saw, you know, one thing I did note that on the day before for the British pound, you know, this was an outside reversal day on the 23rd. So it took out the previous session lows, tagged key support and the median line, and pushed right through the previous session highs. So this is typically a constructive or a bullish formation. That being said, we were at resistance. So a break of the weekly opening range high, which is what this was, as well as resistance. You're looking to play longs into the upper median line parallel 155.39. A break above that, you're looking for 156. I have a question here from, where was it? Petro saying, what is that level at 155.39? That level, my friend, is right here. It was the low that we made back on the 8th. Okay, so it was basically that December swing low that you made. I thought there was something else there as well. Yeah. Okay, so it was low that we made there on the 8th. Nice pivot in price too. So guys, on my charts, whenever you look at the charts for the scalps, when it's a dashed line, it's what I like to call a soft target. Okay, so it's basically a level that's been ascertained either with pivots in price, key highs or lows, or opening range highs or lows. Okay, so anytime you see a dashed line, that's what that represents. But Yeah, it worked out pretty well. Petro says, great, almost to the pip, right? Yeah, I mean, listen, price action speaks. If you're listening, they can offer some great plays like this, right? And irrespective, you're probably asking yourself, hey, Mike, what's so special about the December 8th low? Not a damn thing, okay? There's nothing special about it. But objectively, looking at price action, we've seen the market pivot off that level. Support, support, break. As soon as we break back above it, instant support, pivot, pivot, pivot. Okay, so you've seen the market offer some plays on that region, and on that, you want to make sure that you're watching it on the way up for a possible resistance. Okay? And also keep in mind, Petro, you know, irrespective of that 55.39 level, you had the upper median line parallel. So that offers even more conviction on the trade when there is a confluence or a convergence with another technical feature. All right. Mark says, yes, but still curious. Maybe you need to record some statistics on that. Thanks. As far as the scalps are concerned. Yeah, Mark, I mean, we can post I can post my personal scalp performance for you guys, but the thing is this, you know, a lot of you guys will be able to use those charts and setups for a lot more trades than what I'm actually putting on. And there's a lot of different ways we can play these levels. So the same guy who's looking at the same levels we're looking at, one guy might play this short, one guy might be looking to play this long, right? So there's a lot of opportunity in the levels, guys, and that's why we want to make sure that we're finessing these and being able to play them on the intraday level as they come through. Eileen says, how far back, or how far back in price action to choose the pitchfork start? You're looking at the operative slope. So, guys, I don't want to necessarily, okay, she's saying, how do you know how far back in price to choose the pitchfork slope? So, guys, we're trying to ascertain the slope of the market. So I don't want you to stress, Eileen, how far back, okay, or what, you know, on a time scale, what we're looking for. More importantly, it's the advance of the formation that you're in. And a lot of times, Eileen, it's just finessing. I wish I can give you a ruler book where just follow these steps. It's not, it doesn't work that way. A lot of it's just figuring out the advance of where you are. So sometimes it takes some shots. You know, at first I was looking at something like this, right? And that played out pretty well until the break last week. This was actually the operative one that we were working with early in the month, right? Once we broke to the downside of that, I don't have any reference points. Okay, great. So now we'll reassess it off the turn, right? So here's the broader turn. You want to take reference points off of that turn in price. I'll show you some more examples, Eileen, and let me know as we go through these setups if there's a question on it. It's hard to kind of just give you a blanket statement on how to apply it without looking at an example. So we'll look at a couple more here today. Any other questions on the pound? So objectively speaking, the pound made a break to the upside for the opening range. You stay objective near term, constructive above 54.68. If this downside gives out, you're looking for a run back into 54. The broader bullish invalidation level is going to be this slope range here. All right. A topside break above 55.39. You're basically looking for the 56 handle. In fact, I'm going to bring this in, guys, into a 764. Choke that target up just a little bit. That puts you at 55.88. Makes a little bit more sense with the ATR range we're looking for. Okay, any questions on the pound? So, with the dollar, we'll be watching this very closely, specifically if it holds the opening range high for the week, and then the U.S. dollar breaks below and finally gives us the correction play. That's your signal for a little bit more of a conviction play to the upside for the sterling. If the dollar holds this support and sees a rebound back and recovers within the confines of that formation, and the sterling dollar breaks back below the opening range high for the week, that's also a conviction on playing the recovery to the downside. All right. You mentioned a white paper on scalping a while back. Would be awesome. Oh, you mean a write-up? Sure, sure. It's absolutely on the way, Stefan. I'm sorry, guys. We're really gearing up to finally make the full launch here for SB, so there's been a lot of back-end stuff. I will be putting a lot more on the reference page. So as it stands right now, last week I did add to the resource page opening ranges, so you can see a quick breakdown here of how that part of the strategy works, but I'll be adding a lot more to this, Stefan. So we're going to add triggers for RSI, a little breakdown on how to use those more effectively, and keep your eyes on that resource page. I'll keep you updated as we put more material on there. But Stefan, absolutely, man, I'm on it. All right, moving right along. So working near term, constructive above the lows that we made here. We'll look for the opening range for the U.S. trade if that gives us any plays. But right now the range is focused in 54.70 into 55.40. The sterling yen, another beautiful setup. Here's what we've been working with since the start of the week. The basic premise has continued to be against 103.96 into 104.26. Excuse me, 184.26. That region has the R1 monthly pivot, the 618 retracement, a longer dated 50% retracement. It is the monthly high, right? Obviously we probed through it, but no closes. So as long as we stay below that level, the longs are at risk. Again, it's an uptrend, right? The opening range for the month looks like it broke to the upside, but longs are at risk below 84, before the 184 handle, basically. The broader uptrend is still in play. I do think this one gets a nice stretch to the upside this year. That being said, we're trying to play shorts against that region. Well, an overnight trade, we actually cracked it, or yesterday we cracked it to the upside briefly. Let me show you what the scalp looked like. Here's what we looked like yesterday in the webinar. Do you remember? We came right through the 84.26. This was our bearish invalidation level. Okay, so we had no plays on the upside here. We ran right into the median line. Okay, then on Yellen, an outside reversal candle flipped that, breaking below the support trigger we were looking for earlier. So on Tuesday, guys, or on Monday rather, I wrote a piece on SB saying, listen, we were trading just below resistance. We were right here. We're waiting for this trigger break to give out, and we'll look to play the short into the opening range low. Well, the trigger never gave out. Okay, so there was no plays here to even tempt you into a short. On the way up, this was a trigger, and an operative trigger I would have definitely been interested in. On this trade, I was already in the sterling dollar short, so I don't want to, compound and put all my eggs on a sterling short trade. But it panned out pretty well. And you have a 46 pip ATR here, so you got a nice wide range for your scalp targets on that move. In overnight trade and yesterday's post, I did note that momentum continues to hold the 40 region. Okay, and on the pullback here, the target was actually 83.19, but momentum hold at 40. Again, on the rebound here, momentum hold at 40. On that move, you're getting some divergence in price, right? You can't really see it very clear until you bring it into a line chart. Okay, lower low. It's very slight, but higher low, followed by trigger break. 9 times out of 10, I will take a trade like that. All right, so that put longs into play. Again, even with that long, you're only looking for a stretch into 84, okay, or 84.30, 84, this region here, because that, again, is major key resistance on the daily chart. And that stretch took you above 60. So my point being, guys, at this point, the momentum signature is just not bearish. It's just not bearish yet. So there's nothing we can do here to really try to attempt a short side just yet. In fact, at this point, probably be looking at this momentum trigger, and this is the support trigger. All right. So here's your U.S. Open. Looks like the opening range low is going to be set right at the bottom of that range. If you see the trigger break to the downside and you see a move surpassing 83.90 on the south side, look for that final drop into 83.19. And then again, this is the medium-term bullish invalidation level, meaning if we crack below that, you really look for a much more magnitude slide to the downside. Okay. That being said, a topside break above this trigger and a move surpassing the highs that you made in Europe today really looks for a tag again of the upper median line parallel. Depending on time, that's going to be variable, but you're essentially looking for the 85 handle. Okay, looking to sneak it right into this zone right here. All right. So that's sort of the game plan here for sterling yen for now. Questions? So we'll wait for a broader momentum turnaround. Till then, we won't fight the trend. As long as you hold above 84.26, the opening range high for the week initially will continue to favor the long side. Triggers are set for a short exposure if we make it back below the underbelly of this support region. All right, so that is sterling yen. My favorite setup of the three that we've been following as far as the near-term scalps has been sterling key. What a beautiful play, guys. I mean, listen, it's a wider range scalp, so it's not for the faint of heart. You are looking for about 50, 60 pips per scalp here, but, I mean, it's just been super, super clean. So here's a quick walkthrough of how that's been panning out. You know, the basic premise here again, as we came into the week, we were talking about, or the previous day on Monday night, we were talking about this highlighted region as our near-term bearish invalidation level, okay? And on a break of that region, you'd be looking for resistance targets at 206.26, 206.99, and the upper median line parallel that dashed. Well, that's exactly what you got. You got the break. There's 206.29 or 26. There's 209.99. There's the upper median line parallel that caught the highs. At that juncture, a break below 70 is a downside trigger. You might not have taken that because we were right above that 618. No problem. You actually got a concerted trigger break here on Yellen, and again, an outside reversal candle. So this is where you would want to jump into the short, stop against the swing high that you made, looking for initial targets at 206.26. Again, right back again at 205.53, and the lower median line parallel. Boom. Boom. It's been textbook. Okay. So here's where we were last night. We said, guess what? 205 is going to be the near-term support. We'll look at that highlighted region as our near-term bullish invalidation level. As long as you hold above that, you don't necessarily want to be jumping on the short side of sterling key. Okay. This actually was an operative trigger. By the way, real tight stop against the swing lows there or against that trend line would have been a great start. Looking for a long from 205 right into 205.50. A little bit smaller than the ATR stretch, but you did get the stretch higher. Would have actually attained the 60 pips. Okay. At this point, where do we go from here? Here's your support trigger. The opening range high for Europe is right around 205.63. I'm going to highlight that real quick here. And basically, if we break above this region, near term, you look to play the recovery right back into 206.27, 206.26. Okay? The only thing I don't like about this play is you don't necessarily have a trigger that's even forming yet. So I'm going to have to really watch price action pretty close. This would be just an objective range break for the European range, and that would put the focus back on the long side. If this happens with a coincidental break above 50 in momentum, that would be comfortable enough for me to try long. But just keep that region in mind. This continues to be and will remain our near-term bullish invalidation level. Okay, and as long as price stays above 205, we'll broadly stay constructive here on sterling key. Favorite setup for the week, guys, and it's a long-range scalp. So again, if you're newer to the strategy, it might not be your ideal candidate with a 60 pip stop and a 60 pip limit. That being said, it has been giving us the cleanest ranges of the scalps we've been following this week. Eileen says, with such a wide range, we need to wait for larger breaks before entry. You mean, Eileen, on this break here, for example, you'd want to wait for it to clear before you enter? I hear what you're saying. So, Eileen, when we're playing, let me take one step back here, guys. A quick overview of how we're looking to play these scalps. It's always going to be better to buy into support and sell into resistance. It's always going to be better to play an opening range break where your stop is against the lows. Buying a break of resistance is always tricky, Eileen. It's always tricky. Or selling a break of support is always tricky. On something like this where you make an outside reversal candle, your stop against the reversal high, that makes sense. If you're opening the range for the session and it's a tight opening range for the session, you put a stop against the high and play the break. That's a different ball game. But trying to play the breakout of resistance is always difficult. What you'll want to do, Eileen, is that 9 times out of 10 when I'm trying to play that type of movement, you wait for the break and then you wait for a near-term recovery to take the long. On the initial break, a lot of times, I mean, if you catch it fast enough, Eileen, I'm with you. But if you don't, you want to wait for the pull back into that region. And I'm talking in real near term, okay, like a 5-minute chart. Wait for the pullback and then just try to jump into the long at that point. I hear you. On the initial stretch, sometimes you'll get these wicks that just go right through. All of a sudden now you're short and then the market pulls right against you, right? So be prudent. Wait for the pullbacks. You need to see the conviction in momentum. So remember, if you're looking at a 30-minute chart, you need to see a 30-minute candle close for you to confirm a break. So that's why you always want to bring it into a 5-minute chart or a closer time duration so that when that candle closes, you can get the definitive break in the trigger. Okay? Does that make sense, Eileen? Says, oh, wait for the quote-unquote wider patience for entry. Yeah, I guess that's a good way of putting it. And remember, when you're playing in a scalp like this, guys, you're looking for 60, 55 pips. There's room. So, you know, the best defense, guys, the best risk management that you can possibly undertake is a proper entry. Okay, I really can't stress that enough, especially when we're playing a tight range strategy like scalping. So, Eileen, I hope that offers some clarity. Mark says, why not risk 30 pips here? Clearly still constructive. I wouldn't say it's clearly still constructive, Mark, because momentum actually broke below 40. This is the first 40 break that we've seen. The momentum signature looked pretty constructive since the start of the week. 60 break, 40 hold, 60 break, 50 hold, 70 break. Yeah, this does invalidate the broader, the near-term upside, but doesn't necessarily turn us bearish. So that's one thing. Another thing, Mark, is I don't have a trigger, man, to the upside. I need a trigger to put me into the trade. Guys, in scalping, in my personal strategy, it's not just about the price levels. Okay, the momentum plays a huge part of it. So I can't just set a entry at resistance to sell and an entry at support to buy. It doesn't work that way. I need something intraday to put me on the long side of the trade. So for argument's sake, let's bring this into a 5-minute chart and let's just see. Maybe there is a trigger that's here pending. And you know what? There was. We just missed it, actually. High in price, high in momentum. That was a confluence break of that resistance trigger and 50. It would have put you long. Would have put you long from 205.18 basically. So you're looking for about 55, 60 pips. It's pretty tight. Pretty tight. You still probably get it, but it's still pretty tight. So that's where I would have gotten the long, Mark. Does that make sense, man? If we were watching this, I don't know, 15 minutes ago, that would have been the entry for the long. Stop against the lows. Mark says, yes, yes, understand. All right. He says, learning every day, smiley face. Right on, Mark. You're in the right place, brother. You have some great questions. And guys, don't ever underestimate or don't ever hesitate to ask any questions you have because I guarantee you there's someone else in the room with the same exact question. So, feel free. I want to make sure you guys are getting out the most of the service as you can. So you're not off as far as the idea of taking the long here, but we just missed the trigger. So we'll see how the U.S. opening range starts, and maybe that break will give us a little bit more of a trigger to the upside near term. Eileen says, yes, I love others' questions, so please keep it up. Right on. Stefan says, how many touches on RSI peaks make a trend? So, Stefan, it's the same exact thing as price action, brother. 2 touches are speculative. 3 touches validate. So here's an example where you only had 2 touches, but it still worked. So don't get me wrong, Stefan, let me take a step back. Typically, in trendline analysis, 2 tags is speculative, 3 tags is confirmed for trendline, right? Does that mean that I'm not going to give weight to two reference points on a trigger? No. But Stefan, does that mean I give more weight when there's a 3 trigger that breaks? Yes. Yes. Does that make sense? So if I have only 2 touches of the trigger and a break, and price action's giving me the break, it's a valid trigger. It's not that I won't take it. It's just that it won't be as a conviction trigger. So this is where, the trade lot size comes into account. We don't talk about that a lot here in the webinars because that's different for everyone. All of you have a different risk tolerance. All of you have different goals. So I can't necessarily tell you how much leverage to be putting on the trade, but that's what helps me determine it. If it's a triggered break that has 3 tags, this is something I would consider with 3 tags because right ahead of the break, there was actually a touch and a hold before it broke. So that's something I'll give more emphasis to, more conviction, maybe a larger trade size. Where something like this, where it's just 2 tags, maybe not as large a position. So Stefan, I hope that answers your questions. He says, so it's worth drawing a line on 2 touches, but validate on 3. Got it. Right on. All right, Stefan, right on. Again, it's worth drawing it, and the 2 still could prompt an operative move, but 3 is where you really start to get a little bit more conviction. 3 is where you want to up the leverage and put a little more skin in the game, as it were. So great questions, Stefan. Great questions. All right, so that's what we're looking at right now with the Sterling Key. One other thing I just wanted to note, guys, on Sterling Key actually is where this line is. So the former operative pitchfork formation that we were working in for the last 4 weeks, the break here early in the week, test that former resistance as support. So it's pretty textbook. Pretty textbook. All right, so that is Sterling Key. Last but not least, from the intraday page, and something, again, that we've been following very closely, the gold trade. I don't really have much to say on this, guys, because it's the same exact setup we've been working with for the last 5 days. 1196, 1198 is a major key support as long as price stays above that region on a close basis. You have to remain, I don't want to say constructive, but you can't be bearish. Okay, you can't be bearish. So yesterday I noted a couple of different things. We made a second stretch and attempt to close or push below that 1196, 1198 range. It failed yet again. The lows on that spike right on line with trendline support. Momentum held 40 and actually looked like it was giving a trigger break last night. Here's what the live chart looks like for gold. Okay. Now, again, I even noted this in the report. You can't confirm this trigger break, again, because it's based on RSI, which is solely based on the close price. So if this thing pulls right back into 1200, this trigger will look like it never even broke. But here's what we're looking at. The 1196, 1198 region is still preserved on a close basis. We haven't even gotten close. And while above this region, shorts are at risk. To prompt long exposure, on a near-term prospect, you actually did get a very nice trigger here yesterday on a 4-hour chart, or if you look at a 2-hour chart. But on the broader scale, to play the recovery, you still need to see that topside break above 1218, 1224. So here's the trigger I was just telling you about right now. Okay, that's the trigger that actually gave out last night. Okay. And it was a very, very strong suited trigger. You had 1, 2, 3, 4, 5, 6 tags of resistance. So Stefan, talking about trigger lines and what validates it, that's a valid trigger line right there, my man. And that's one, again, that would be an operative play. So price is at support. Again, we failed to close below this key range twice. Okay, you got divergence into the lows. Price action lower low, lower low, lower low. Higher low, higher low. Okay, and in fact, that's a support trigger right there. So that would have been an operative long. Initial targets, you're still looking for 1218, 1225. And this is the near-term bearish invalidation level. All right. So the gold trade, again, I don't want to necessarily be calling the long just yet, but you do not want to be looking lower while above 1196, 1198. Okay, and we'll see today. If the trigger breaks today and we finally get the reversal off of 40 here with the trigger break, there's no reason not to be constructive into 1218, 1224 as just an initial target. All right. Also, the significance of that region, guys, don't forget, is also highlighted by the longer dated median line that you see here in blue. Okay. Take a quick look back. Off the September 2013. Support, 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 pivot on both sides. Break, resistance, resistance. Consolidation break, pivot. If we break back above this, we'll look to play the upside targets in 1239, 1249. All right? All of this is based on the fact that this is your bullish invalidation level. So if we clear this to the downside, sayonara. Look for 1171, look for 1151. Any questions on gold? The cleanest of the commodities, again, in my humble opinion. Not so much a scalp, but guys, over the years, gold has just been something I've always followed. So you'll always see it on the scalp intraday page, just because it is a trade that does have a lot of pertinence, I think, to other parts of the market, specifically with the inflation picture that Yellen talked about yesterday being such a major factor, about them trying to stoke inflation in Europe. All these things are typically going to impact gold prices. In fact, with the dollar, okay, at support, it's another thing we'll be looking at. Dollar breaks down below the weekly opening range low. You look to play that that decline into support. Well, that would suit really well with a hold here and a near-term recovery in gold. So again, the puzzle pieces are looking like they fit pretty well here. Okay. So those are the featured setups on the intraday page. I want to jump into your questions and setups you guys want to look at. Okay, I see some questions here. Bear with me 1 second, guys. A lot of questions coming through. So I think it was... Who just asked me to take a look at a pair? Chintan. Aussie broke the February opening range high. Can you look at this, please? Absolutely. Absolutely, yeah. So if you guys remember, the Aussie was featured on the intraday page all last week. I kind of didn't like where we opened this week, so it fell out of focus for us. But you're absolutely right. We're absolutely right. I tweeted this chart yesterday. Look, the opening range high for the month is being challenged. More importantly, another technical aspect I'm looking at is that median line off the 2013 October highs, okay, that you see here in blue. On the way down, support, 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 breakthrough, instant resistance. It looks like we're popping through here today. Near-term resistance at this point and key threshold to the upside is going to be 79.20 into 79.38, I believe. Yeah, 79.38 and 79.19. Okay, that's the key range of resistance that you're looking for near term here for the Aussie. Add to that, which is also a 618 and a 50% confluence of fibs. Add to that a basic trendline resistance off the highs from September, and you're looking at a pretty decent range of resistance. Brian says, sounds good, Mike. Just went short the Aussie 5 and 30-minute RSI. Might be working while a pitchfork support. See you Sunday, Monday. Are you talking about see you Sunday, Monday, Brian, on the Aussie, or are you okay, so let me jump into the near-term chart. I'm concerned about trying to press a short on this one, Brian, from this level here on the Aus, but oh, Brian, I'm so sorry, my man. You're talking about the Expo. Right, yeah, that's this weekend, right? It was March 1st. I will get back to you for sure. We'll send you an email. I'll see what Jamie's up to. I might have an obligation, actually, I did not know about on Saturday, but I'll still see. I'll still see if we can squeeze in, Brian, some sort of meeting. Would absolutely love to grab a drink with you. So I will let you know via email. We'll touch base with Jamie. But looking at the Aus, here's what it looks like the intraday. I don't want to waste time on this daily anymore. Here's what it looks like. So you're absolutely right. The opening range high for the week is really, for me, Chintan, what I was looking at. Not necessarily the opening range for the month, excuse me, per se, because the near term from a scalp standpoint, that's really what validates your near-term bias. Long story short, I think this whole thing turned around yesterday when Yellen started talking. Okay, so you had an outside reversal candle off the lows. That reversal candle also prompted a break of a trigger here. I don't know if you want to call that a tag, but 1, 2, 3, 2 tags right here. This looks like a fourth tag before the break to the upside, right? So that coincided with a nice trigger. And that initially would have put me back on the constructive side, looking at targets at 78.05 level first, 78.24 level, which was the opening range low for that Sunday Asia Pac Open, and a 786 retracement. And then the last target for me would have been the opening range high, 78.50 for the week. So this breaks keep the upside focus in play. Let's reassess the levels here real quick. Yeah, I guess that's the operative slope I'd be working with at this point. Okay, so guys, we just added this. I'm going to put this in a dashed line here so we recognize we're not quite 100% sure that's the operative slope just yet, but absolutely. Right at that median line, divergence into the highs. Again, bring them into a line chart, make it easy on yourself. Higher high, higher high, higher high. Lower high, lower high, lower high. So you're seeing some exhaustion here as you head into the highs. Okay, this is how I'll play the Aussie dollar near term. I think we have a play here into the U.S. Open. So here's your European opening range low. Rock solid at 78.70. Also keep in mind 78.70 actually happens to be the monthly opening range high. 78.70, you see that? So the monthly opening range high is also the U.S. opening range low so far, and European for that matter. So that's the level I'll watch. Don't give any mind 78.70 for now. So the focus is going to be on 78.70 as support. Resistance is going to be along that median line, so that's going to be dynamic in time. We're looking for short triggers. Don't really have anything here. Let's bring this into a closer time frame. We just missed it. Gosh. So here's the trigger, guys. Still might be a decent play. Still might be a decent play. So one thing I want to note, we're still within the European and U.S. opening ranges. Okay, so you don't have a range break for this session to give you the validation. So all I want to say is this: when you're looking to play within the opening range, meaning you haven't gotten that bias break yet for the session, you want to be nimble. So on this stretch right here, off of 78.70 into 78.90, you got a 20 pip stretch. Yeah, that was a nice trigger. Even if you were to take this position, guys, you won't want to target anything ahead of 78.70 yet. Okay, meaning into 78.70, I'm already cleaning up that trade. Okay, maybe I'll leave a little bit on. Maybe I take off a quarter or take off a half, bring the stops to break even, and see if you get the break of the opening range low. But you don't have the validation to target anything sub 78.70 yet. Meaning, as you come into this region, you're doing something. Okay, taking something off the table, bring stops to break even. If you get the break, you look for a move back into 78.50. Okay. But objectively, guys, I do want to note that if we hold above 78.70, again, that opening range high for the month, you should be preparing for a possible break higher. And in fact, with the dollar index doing what it's doing, if that breaks the lows, you're probably going to see the upside give out here on Oz. Such a scenario, again, you'll be looking for that trend line resistance that dates back to the highs from September on the daily chart. 78.20, 78.38 is not highlighted on the scalp, so let me put that there. Okay, so there's that highlighted region that's on the daily chart. And the slope line does come through there from September, guys. It's just that you have to really zoom out for it to snap the right reference points on that. Let me adjust that. There you go. All right, so those are the positioning here for the Oz. So let's clean these levels up. That retracement is null and void at this point. And alongside this pitchfork, one thing I did want to check out, guys, it's going to get kind of messy, so just bear with me. I'm going to clean this up a little bit. Okay. I do want to just take a quick extension off that low and see if we've completed anything here. Might be 100 somewhere close by. Wow. Oh, man. After all these years, I still get excited when you see stuff like this. Look where the 100 is, guys. 78.82. In fact, I'm lying. It's even higher. Come on. Okay. Okay. There you go. So let's go ahead and clean this up. 618. Might be worth leaving that one. All right. All right. So these are the new levels I'll be working with. Again, if you're new to the session, guys, always remember you can take a freeze frame or a picture of any of the charts that you see in the webinars on SB. Just go ahead and click on the camera in the top right-hand corner of your screen there, and you'll be able to save these charts for future reference if you're trading these setups. But these are the levels I'll be looking at. Look, to open up the session, like I said, the focus is still on the median line off the low and the 78.70 support barrier, the opening range low for Europe and U.S. That's the focus right now. If we get the downside break, like I said, look for a move into 78.50, 78.30. I really wouldn't stress at this point. And on that scenario that you get a downside break, okay, of the opening range, that is when this retracement here becomes pertinent. Ahead of that break, this means nothing right now. This is just speculation because you have no validation of this being a high. But I just want to bring it to reference here and see if any interesting levels come out. 236, 78.60, I'm not going to stress that because if we break the opening range low, that's going to be voided. So we'll probably get a better play than that. 38.2, 78.38. 32, we'll leave the 50. The 618 comes above that 618 extension. 76 looks good. Okay. And that's your scalp setup near term for the Aussie. Keeping in mind as well that this right here, that this is the weekly opening range high. Okay, so what does that mean? Objectively, guys, objectively, once you break below this, it invalidates the long side. Doesn't necessarily make it bearish, but it invalidates the long side bias. Okay, so that's an interesting play there. Stefan says, what is the time frame to determine an opening day range? If looking at a 5-minute chart, is the first 5 minutes of the range? I'm not sure what you're meaning here. What's the time frame to determine the opening day range? Oh, so for the opening range for the session, Stefan, it's not necessarily a day. So we're gonna have opening ranges for Asia Pac. We'll have an opening range for Europe. We'll have an opening range for US. And typically, Stefan, you're looking at the first hour and a half of trade. I don't want you to stress time. In fact, I encourage you, Stefan, to go ahead and look through the resources page on the opening range section I added on there. I tried to give you a breakdown. He says that's it, the first hour. So basically, yeah. But what I want to say is I don't want to stress time. I want to stress price action. So, for example, if the opening range, within the first 45 minutes or the first half hour sets a high, sets a low, defends a high, and tests the low, then that's the opening range. I don't need to wait for the hour and a half to pass. If in the first half hour, first 45 minutes, we've tested a high twice and defended a low twice, I'm quite content calling that the opening range. If the opening range just stretches into a high and then comes into a low and it sits there for the next 3.5 hours, that's fine. The opening range is going to be that stretch high and stretch low. You're still waiting for a break of that objective range. So does that make sense? Then it's testing support and resistance. Yeah. It's not necessarily have to be a support or resistance, Stefan, right? The opening range can take place anywhere. It doesn't necessarily need to be at support or resistance, but we're looking for the market to set a high, set a low, and test one of those. And once that's been completed, however long that takes, whether it's 25 minutes or an hour and a half, that's when we can assert that the opening range has been put in. Does that make sense, Stefan? Establishing a couple of highs and a couple of lows. Okay, testing them. Right. Right. So for me right now, I'm quite content. Here's the European Open, right? Here's 3 o'clock in the morning here, U.S. time. Here's the European Open. Europe set a low in the first 10 minutes. It rebounded off that and set a high an hour into trade. So that's the opening range. And right now, we're still within that opening range, right? We tested the low here to open up U.S. futures markets just ahead. That held. And yeah, we probed through this a little bit, but you're not going to sit there and split hairs. On a move like this, you still haven't even surpassed the Asia Pac highs. So you can't really validate that as an opening range break. So now for U.S. markets, I usually work from the 830, 930 spot. So here's the 830, or here's the 830 low. Just happens to be at the bottom of the range here anyway for a support range that we highlighted, 78.80 to 78.90. The opening range high is the exact Asia Pac high. We just tested it and came off. So right now I'm looking for a break of this heading into U.S. Okay, here's the 830 low. And I'm being as granular here. I'm just trying to give you an example, Stefan. So right now for U.S., this is your opening range low. This is your opening range high. You see a topside break here. Heading into the end of the U.S. session, you're constructive above 78.85. You see a break below 78.85. Objectively, heading into the close of U.S. trade, you're bearish against 79. Okay. That said, for me, I'm going to be focused on the European opening range. So I'm going to be focused on that high that we set, which was a high from Asia, and the low here at 78.70. I'll wait for a break of this range to validate the bias. Stefan, make sense? He says, I get it. Thanks. Appreciate the explanation. Hey, it's my pleasure, man. My pleasure. I want to make sure that we're all on the same page here. Petro, great to see you, says, I think you missed my question. Can you take a look at Kiwi Dollar? I think I did too. Tight New York opening range. I think it looks a little tired here. Kiwi Dollar, sure. So here's what Kiwi Dollar looks like on the daily. Major key support as we headed into the start of the week, we noted at 74.54 into 74.69. This is a 50% extension from the decline off the July high, but more importantly, you have the 2012 low, the monthly pivot, a trend line support here that dates back to 2006. It's actually a medium line. So if you take the slope of the 2000, or if the highs from the 2007, 2011, you mirror that to the low that you made here in 2006, pivot, pivot, support, break, gap above, now support right within that same range. So key support into 74.55, let's call it, has been what I've been waiting for as a break to the downside to reaffirm the continuation lower until you get that. You need to be cautious. So here's what the Kiwi looks like on the intraday. Okay, so here's a nice strategy for the opening range of the week. Here's a nice fake out. Here's your weekly open. Okay, you set a high on Monday. Heading into Tuesday, you set a low. So you have your opening range set at 74.20 into 74 or 75.40. Top side break. No triggers in momentum. And there really wasn't a trigger here in general on an opening range break even to get you that upside bias. So this is not something I would have played. And in fact, it looks like it could be a false break here. Price action is not too convincing, right? So your question, Petro, is tight New York opening range. I think it looks a little tired here. RSI is below 60. The only thing that I don't like is that we're just above the weekly opening range high. Petro, great minds think alike, right? So we just noted that, right? That's my problem with it too. Listen, the greater problem, in my humble opinion, is I'm not really sure I want to be long the dollar, right? We just looked at the dollar index, Stefan. So if you're looking to play some Kiwi weakness, I think you might get a better play. Objectively speaking, you're absolutely right. In fact, the opening range for Europe never gave out. Here's the European opening range low. Here's the European opening range high and the U.S. opening range high. Look for a break above 75.58 or a break below 75.36 to give us the near-term directional bias. You got no triggers here that will really be effective, at least from my part. Yeah, not really a play I'm interested in, to be honest with you. Listen, if you get a compelling short trigger in momentum and it breaks back below 70, what is that, 75.37 here, the opening range low for Europe, it might be a decent scalp to the downside, but not something I would necessarily be interested in. Stefan, if you're hell-bent on trading the Kiwi yen's got a beautiful setup. I was looking at this one yesterday. So looking at the daily, the focus range here since the start, or since the close of last week, is basically the 88.90 level into the 90 handle, this region right here. So near-term support at 90, or near-term resistance at 90. Long story short, the scalp is really what's in focus. So here's what this looks like. I think I tweeted this on either on Sunday or on Monday. But long story short, here's the start of the week. Okay, a little bit wider of an ATR pip here, so you get a little bit more play for your money. But there's that key resistance at 90. Here's the operative pitchfork that we were in for a couple of days here since last week's high. That just broke to the upside. Looking at resistance again. If you get a momentum trigger here, might be a better play. Let's draw these, see what they look like. And that just broke, but no play in price action. Yeah, so you don't necessarily have a trigger. I would be looking for a rally into 90 and see if you can get a short trigger up there. As it stands, this has got even a tighter opening range. So Petro, here is the European opening range low, 89.57. Don't care about the highs. All you got to worry about is the 90 key resistance. So if you get a short trigger up here, maybe look to play initially into 89.50, but the real play, in my humble opinion, would be if you get back below 89.50 to play the recovery back into key support. You're basically looking for a nice drop there, somewhere in the range of 88.70. So it's been a real tight trade, but the levels are super clear. The levels are super clear. So we'll see. Watch near-term resistance at 90. If 90 gives out, I really don't have much in the way of 91.60. There's really not much to fight for ahead of that. You might see the low day close for December offer some support. That's right around 90.75. But your objective range would be looking for a move into 91.60 here. Petro, does that help? Yes, got it. Thank you. All right. All right. Another swing where I got smacked last night, called out 75.55. Stefan, I think you're talking about the Kiwi. Yeah, it's just not worth it for me, guys. It's just not worth it for me to trade it. And listen, if I'm trading dollar crosses with what we're looking at on the index, I'm much more inclined to try to take a scalp against the dollar. Okay, until we have some validation that that low is going to hold for the opening range of the month. Aussie dollar instead of the U.S. range. Not sure what you mean by that, Eileen, but here's the Aussie. Yeah, keep this in mind, guys. This might be a nice play heading into U.S. trade. Again, I'm not crazy about getting long the dollar, but on an opening range play like this, it seems very feasible, a basic play to check the former opening range high before we move off. So that would be a nice play from 78.70 to about 78.50, 30 pip range. Actually, it's only a 20 pip range, so it's going to be kind of tight. That said, we have clear-cut targets to the upside, so we'll see. Watch the sterling key, guys. I still think that's going to be my favorite Kiwi cross and sterling cross for that matter. We went over gold. We are late on time here, so I got to wrap it up. But I just wanted to go through a couple of different things here real quick, guys, that we just touched on yesterday. Some of the commodities that we've been following. And really quick, the euro-dollar setup from yesterday's daily effects report. Just highlighting the weekly chart. I added this on that scalp just to show people, where we are. Remember that 1095 level, guys? We called it on the Sunday open when that tagged. That's still the major key support low for the dollar, the euro dollar longer term. Heading into the daily chart for the euro, looks like this. All right, super, super tight range, consolidating range. We talked about in yesterday's report this operative slope line. Support, 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 break, instant pivot, resistance, instant pivot, resistance. We've been writing it down. We probed through it a couple times, but on a closed basis, textbook. Okay? So the play here is very simple. In fact, you look for a topside break of this formation. If you do get it, you're only looking for a stretch into the opening range high for the month, which is 1530. That being said, the opening range low for the month is super close, and that's at 1270. So you have a very nice, tidy range. Here's what the scalp looks like for euro dollar. Okay, I put an hourly chart on the report. I try to keep all the good stuff for you guys here on SB, but here's what the 30-minute looks like since the start of the week. Okay, so here's your opening range. Start of the week, right above key support. We came into that support yesterday, tagged it right on. Again, we opened up that support. Remember, the opening range low is actually at 70, but we opened up into 62 here, which would have completed 618 from the advance off the lows. So this is what we're going to validate as our near-term opening range low, but very clean, very clean. And a topside break of that slope, which is pretty good with the slope that you're seeing on the daily chart, guys, by the way, that yellow one, is very, very similar to where the positioning of this upper median line parallel is. So a topside break here, and we'd be looking to play into the opening range high for the month. That's it. Still a bearish trade. Nothing's changed. But now that we've got Greece out of the way, the technicals come into focus. Okay, as long as that Greece looming headlines where the market jacks off like 70 pips because someone sneezed, I don't like to play those. So now that we've got that noise out of the way, we can go back into focus on what the technicals are doing. And right now, I still think that shorts are at risk above this 1270 region. Okay. Sterling Kiwi just had a break in retest of the RSI 5 minutes. Who's saying that, Tuttle? Great to see you in the room, man. Sterling Kiwi. Okay. So he's saying he's looking at the 14 RSI. Well, he's still got it here too as well, Tuttle. Right? Here's a high in price. Break, test of support, rebound. Still looks pretty good. I'd be focused here again on Kiwi dollar for the opening range for New York. Where is 830? So the 830 low is right at support, 2502. The opening range high is at resistance 2205.36. Excuse me. Again, even if you get the top side break, watch this region. For me, this is the near-term bearish invalidation level, okay? Play along off that. Not bad. Not bad. I do think you get the upside play, guys. Just as a disclaimer, my humble opinion. But we will see. All right, guys, we'll wrap it up there. It's 9:40, a little over on time. Thanks for sticking out with me. We'll be back tomorrow at 8:30 for another intraday strategy webinar to wrap up the week. Hopefully, we'll have a little bit more of these in play. Guys, watch the dollar. I really can't stress it enough. We've been waiting for some sort of signal on some sort of correctionary play or continuation. Either way, I think you get something materializing here today. Watch from the U.S. You don't have really much event risk on tap. We do have, heading into the end of the week, the revision for the fourth quarter GDP. And also keep in mind, for the sterling crosses tomorrow, you have Carney, who will be on the lines, and then obviously some data out of the UK into the end of the week. Guys, we'll end it there. I'll see you guys tomorrow bright and early. Have a great day trading. Cheers.